My name's Marty McGregor and I'm a partner in the Fox Williams Financial Services team. I advise on a broad range of regulatory matters, including banking, insurance and investment services, but I have a specialist interest in payments, e-money and crypto. I've been watching the development of crypto regulation for several years now, and there are lots of recent developments in this space. I'm going to outline 3 key regulatory areas that crypto asset businesses operating from or into the UK should be aware of. There's an FCA registration regime that applies to crypto asset exchange providers and custodian wallet providers that are carrying on their activities by way of business in the UK. So, for example, crypto exchanges and trading platforms like Coinbase, as well as crypto ATMs and firms that are making introductions or arranging commercial partnerships. This is a registration process under the anti-money laundering regulations, and while not a full authorisation process, is extremely onerous and requires a firm to provide detailed information about its operations, compliance procedures and AML risk assessments. As of February this year, the FCA had only registered 45, which is 14% of the 340 applications it's received. Also, registered firms have to comply with detailed ongoing regulatory obligations, for example, in relation to customer due diligence, reporting and record keeping. There is a new restriction on the promotion of qualifying crypto assets to UK consumers. This new restriction applies to all businesses promoting qualifying crypto assets into the UK, regardless of where that business is incorporated. In order to lawfully communicate a crypto asset promotion, firms will need to either be registered with the FCA under the money laundering regulations, be authorised by the FCA, which is difficult as there's no crypto authorisation regime, or have the promotion approved by a person authorised in the UK. Otherwise, firms need to fall within specific, very limited exemptions, which are not generally available in the consumer context. Crypto asset promotions made to UK consumers will now also need to meet requirements under the UK financial promotions regime, including the requirement to be fair, clear and not misleading, and to contain appropriate risk warnings. There are upcoming changes to the regulated activities regime to bring both digital settlement assets, or stablecoins, and crypto assets generally inside the regulatory perimeter. The full details of these regulatory changes are not yet known, but Phase 1 will likely focus on stablecoins, with Phase 2 focused on other crypto assets. These changes are planned for this year, subject to parliamentary time. The regulatory patchwork in this area is increasingly complex, so my 3 top tips are: 1. Don't assume that because you are caught or not caught by one aspect of the regulatory regime, that you are necessarily caught or not caught by another. The geographic scope of the rules and the types of coin or token that they capture are different. 2. Make sure that you treat your customers fairly. The FCA is extremely focused on consumer protection in the crypto space. And 3. Make sure you keep up to speed with new developments. And this is something that we can assist with if you get in touch.